Namaste, good morning. A session where we complete a lot of areas of small areas of international taxation, commencing from wherever we left yesterday in DTAA. Venkatesh is giving the answer for question number 6. ஏன் நீ கிளர்க்க தான் பார்க்க போறியா அக்கௌண்டன்ட் தான் பார்க்க போறியா இன்னைக்கு Yeah, what's the answer? என்னடா சொல்றான்? ஆமாம் போடலையா? அது சொல்லலாம்ல, அந்த நம்பிக்கையில் தான் நானும் இருக்கேன். Strawberries Private Limited, a domestic company, has derived income from India as well as country Y with which India does not have DTAA. The following details of income earned during the year are under gross rental, municipal taxes, own business income, share of profit from a firm. It's not taxable if the firm is in India, if the firm is outside India. Okay, then so it is taxable, that's what you say. Okay, share of profit of a firm is exempt wherever we get it from. We believe that in the other country the share of profit is after levying tax, so we will not tax it here. Share of profit from a firm is exempt from tax wherever it is earned from. Don't worry, share of profit from a firm is exempt. Agricultural income earned in India, earned outside India. In country Y, municipal taxes are not allowed as deduction and the gross rentals are taxed. Municipal taxes, the income tax. So in the 6 lakhs, okay, they don't allow, they tax entire 6 lakhs in that country's tax law. Now, when you compute in our tax house property, will you allow standard deduction? Will you allow municipal taxes? Okay, right? So to recollect, income from house property says for a ROR, if the property is outside India, it becomes taxable. The method of computation is same as if the property is in India. That country does not allow, doesn't mean we are not allowing it as deduction. It is allowed as deduction. Nambaluடைய method of computation 6 lakhs minus 30,000 minus standard deduction. Are you clear? Okay. Agriculture income and share of income from Y are exempt in that nation. Share of firm is always not taxable. Agriculture income from outside India taxable. The income tax rate is flat 25%. So this is only for this business income. For the other, okay, for house property also. Okay, 25%. Ascertain the income taxable by the assessee. Go ahead. Eight lakh 12,000 Indian house property. And 399 is foreign property. Business 720 and 1120. Okay. Agriculture income. Total income 32 lakh 92,000. அது எப்போனா அது இண்டிவிஜுவல்ஸ்க்கு தான் ரேட் ஸ்லாப் ரேட் மாறும் கம்பெனிஸ்க்குலாம் அதே ஸ்லாப் ரேட் தானே Aggregation of agriculture income is only for individuals. நேத்திலே நான் அதானே சொல்லியிருந்தோம் அதானே இப்போ பயணியும் சொன்னா always doubly taxed income. கொஞ்சம் சொல்யூஷன் போடுறான் அவன் வருத்தப்படுவான்டா நான் இதை போய் சொன்னேன்னா அவன் கண்ணாடி எல்லாம் உடைச்சுருவான் கண்ணாடி உடைச்சிடுவான் அவன் அவன் வேற விஷயத்துக்கு சொன்னான் ஹோம்ஒர்க் சொல்யூஷன்ஸ் எல்லாம் போட்டுல Are you clear? I'm getting 4,76,170. Always agricultural income in India is only exempt. Agricultural income from outside India is taxable. I am not bothered about whether that country gives exemption. Suppose a non-resident earns agricultural income from India. In India, it is exempt. Probably for the non-resident, it is taxable there. Tax credit. Yeah, tax credit will be available for agriculture income also. Whatever income doubly taxed. I am taxing here. Agriculture income, if it is exempt there, it is not doubly taxed. Only business income and IHT. No, I think the question should say. Otherwise, you cannot assume. Agriculture income and share of law explicita சொல்லிருக்கா வெங்கடேஷ் agricultural income from India is only exempted. That's beautiful. They have used the terminology agricultural income means land and building income earned from land and building used for the purpose of agricultural located in India. Okay. Now, this is a important question to understand. So, nice question. Cosmos Limited, a company incorporated in Mauritius, has a branch in Hyderabad. The Indian branch has filed a return of income for assessment year, disclosing 50 lakhs. It has paid tax at the applicable rate for domestic company, that is 30% plus surcharge of HEC of 4% on the basis of paragraph 2 of Article 24 of the DTAA between India and Mauritius, which reads as taxation of PE of a contracting state has in other contract shall not be less favorably levied in the other state than the taxation levied on enterprises of that state on the same activity. That is, I will not tax it at a rate higher than the rate at which you are domestically taxable. So in my case, my domestic companies are taxable at 30%. And our foreign companies are taxable at 40%. So they said, look at this clause, the taxation on a PE that is there in India of a contracting state, okay, has in other as in the other construction state shall not be less favorably levied in the other state than the taxation levied for the same activity in the same state. I will not tax it at a rate which is lesser than, which is higher than my domestic rate. However, AO computed the tax of the Indian branch at the rate applicable to foreign company. India the taxes. The taxes in India. A PE in India, that foreign company paid 30%, saying tax law or DTAA, whichever is beneficial for the assessee. DTAA says that you will not tax me at a rate which is unfavorable. Unfavorable means level playing field. Whatever tax you are levying for the domestic company only, you will levy for me also. 30 plus 4 வச்சுக்கோ. Huh? A was wrong. Why? No, நீ தப்பா புரிஞ்சுக்கிற சுதா. இது வந்து tax credit of that countryக்கு 40% உண்டு காஸ்மாஸ்க்கு. நான் கேட்கிறது for the Indian company, for the Indian PE, what is the tax that needs to be levied? Why 30%? What is the parent legislation? You are right. What is the parent statement you are talking about? Can you from the first read it? Are you clear with her definition? Okay. And the beauty is tax rates are not there in income tax law. All of you are right. Assessee can take the rate either as per income tax law or as per DTAA. DTAA is not overruling Finance Act. The tax rate in income tax law 115A, all 115 has tax rates. Okay. So all 115 la இருக்கிற rate or rate prevailing in the DTAA, whichever is beneficial. TDS rates are there in the tax law, in the income tax. But part 1, 2, 3 of the Finance Act says tax rates applicable for various assessees, individual slab rates, foreign company for DTAA does not overrule that. அதனால தான் நான் பேஸ் ரூலுக்கு போங்கன்னு. Income tax law or DTAA, whichever is beneficial. Second, when the local rates for the local income, that's where I am trying to make you understand the question itself. For foreign income ku da in the option whichever is more beneficial. This is income of a permanent establishment earned in India. Cosmos Limited, a private company, has a branch office in Hyderabad. PE in India, income earned in India, tax rates are applicable only for the international income or income which are taxable in both the state, contracting state and the other state. This question arises. Am I clear to you? According to section 90, having another income. So it doesn't overrule that rates. That rates are constant rates. For last question, 25% in the foreign state. Does that mean India, you will not pay that 4% surcharge or something like that? I mean, HEs or not? Permanent establishment in India. It's not a resident. It's a foreign company having a permanent establishment in India. So the rates applicable for the foreign company. Resident, if they incorporate a company in India, then it becomes a resident company, separate legal entity. Branch is not a separate legal entity. It is an extension of a foreign, okay. But so it becomes a foreign company only, but having a PE in India. Mala, a resident, derived 15 lakhs from a business in a foreign country for the financial year. She had paid flat tax of 25% or the above. She has rental income from Mumbai for the year. Interest on money borrowed for the acquisition of house property at Mumbai, 90,000. Government of India does not have any agreement. Compute the tax. Quick, let's do together. An occasion to do individuals thinking, that is assessment of individual, because they normally club assessment of individual with this. Business connection, okay. Permanent establishment. Sir, what is the entity, sir? அவ்வளவுதான் சார். Foreign company, sir. So, நம்ம அக்கவுண்ட்ஸ்ல படிச்சிருப்போம். Branch, foreign branch இருந்ததுன்னு வச்சுக்கோங்க, for an Indian entity, that profit is taxable in India. ROR அது. That's why people start foreign company, subsidiary company. They don't know why branch is not a good practice across the world is because both the countries will tax. Whereas if you start it as a subsidiary, only that country will tax. Now to cover that, they brought poem. நீ வந்து பிரான்ச் ஆரம்பிக்கிறத வந்து நீ கம்பெனியா மாத்துற. Yeah, even for Mauritius, that establishment need not be a incorporated entity. A branch is also an establishment, permanent establishment. Just that it is becoming popular slowly in international taxation arena. This question shall be worked out under 115 BAC, the tax. There is no big difference. 80C la edum illa. Okay, in some other question we'll work out. This question will work out normally. We'll do one question in 115 BAC because recently both the questions they asked this 115 BAC. Both for old and new syllabus they asked. Sorry, interest is there. Sure, question DTA and all. Sure. Hmm? ஓ இந்த கொஸ்டின்ல ரவுண்ட் ஆஃப் இருக்கா இல்லப்பா ரவுண்ட் ஆஃப் பண்ணாதே 2 டிஜிட்ஸ் வரைக்கும் எடுத்துக்கோப்பா அமௌண்ட் ரவுண்ட் ஆஃப் பண்ணலாம் ரேட் ரவுண்ட் ஆஃப் பண்ணாது ரமேஷ் an individual resident தலையில முட்டிக்கணும் an individual resident furnishes you particulars of income for the previous year. He earned income in country M and India has not entered into DTA. This question we will do both normal and 115 BAC once to recollect the provision. Okay. Income from house property in M, business income in India, dividend from company in country M, royalty income from country M, business income, income from house property in India, donation to PNMNRF, incurred medical expenses for his mother who is aged 85, rate of taxation in country M. Ramesh disputed royalty income in country M but paid the tax on that income in June 20 after the appeal was decided by the appellate authority. The royalty income is charged at a concessional rate of 15%. You won't give him relief for that. Foreign tax credit rule says where you have disputed, you might have paid tax. Dispute pannalam, you should pay tax. They will deduct tax. Then FTC, it will be available only in the year in which the dispute gets resolved and the favor is in favor of the revenue. In favor of the assassina, there is no problem. In favor of the revenue, but income will be computed, taxed. Okay, right? Should be June 21. Okay, we will do both under 115 BAC and under normal provision. Go ahead, start. Like you do the standard deduction also. Give standard deduction. 1 minute, I'll check it. Medical expenses can be claimed under 80D. Correct, Raja. Patent. Take it, assume it is a patent. How much is that? 25. Doubly taxed income now or house property, business income and dividend income, right? Or royalty varadu. Okay. Doubly taxed income or house property. Yeah, that 80 RRB. Yes, you can claim 3 lakhs or actual royalty received, whichever is less. Huh? Yeah, we'll take. Yesterday did know for royalty to country A 28%, country B 15%. And the money we'll go for income wise the rate. That is how actually it will happen. Just for this question, I'm working on showing. It's the only addition. There is no unabsorbed depreciation. There is no scientific research or capital expenditure. No self-occupied property, etc. 4 lakhs. அங்க பெனிஃபிட் கிடையாது.
அது வேற. அது பொறுப்பா நம்ம பண்ணுவோம். வீட்ல பண்ணலன்னா செருப்பால அடிப்பாங்க. அது நீ செருப்பால அடிக்கிறது யார் இருக்கா? இதான் போட்டு இருந்து போடலையா இல்ல கம்ப்ளீட் பண்ணல. அடுத்த சம் போடுறேன். அது அடுத்த சம் அதுதான் சொன்னாங்க. சமம் போட்டிருப்பா அவங்க கம்ப்ளீட் வராம வேற போயிட்டாங்க. இல்ல ஏதாவது வர வேண்டிய வந்துட்டு
Right? Okay. சொல்லு. Arif is an resident both India and I understand the second part that it is a last class or only one class. But what made you to think he will remind you? No, one sincerely சொல்லிட்டாங்களா எனக்கு வந்து Arif is both India and foreign country in previous year. He owns an immovable property in both the countries. He earned an income of 50 lakhs. This is a case where we have spoken yesterday. He earns an income of 50 lakhs from rubber estate in the foreign country. He also sold some house property situated in foreign country. This resulted in STCG. Arif has no permanent establishment in India. However, he derived a rental income of 6 lakhs from property let out in India, and he has a house in Lucknow where he stays. So, he is a resident in two countries. In one country, he has a house and a business. In another country, he has a house. Okay, and okay. Article 4 of DTAA between India and the foreign country where Arif is a resident provides. Where an individual is a resident in both the contracting states, then he shall deem to be the resident of the contracting state in which he has permanent home. What do you call it as? Emotional connect. If he has permanent home in both the countries, he shall be a resident of the state with which his economic relations are closer. You are required to examine with reason whether the business income of Arif arising in the foreign country and the capital gain in respect of the property situated in the foreign country can be taxed in India. Why you are so sure, Sudha? So his economical connect is outside India. Business he is doing, that is his main source. Okay, foreign country. Tax later we have a terminology for this. This is known as tiebreaker rule, where a person is a ROR, resident in two countries. We go according to tiebreaker rule. Tiebreaker abdina to determine which country is going to tax him. Economical connect, emotional connect, okay, stay connect, otherwise determined. In this case, the economical connect is clearly established outside India. Stay both the places, emotion both the places, but the economical connect is outside India. So he is a he cannot be taxed in India for the foreign income. He is only Indian income. He is a non-resident as far as India is concerned, and he will be considered as resident only of that foreign country. Okay, am I clear to you? No. Don't worry about that. That is actually the emotional connect first இவங்க கொடுத்திருக்காங்க. But economical connect and emotional connect are twinned. என்னடா photo எடுத்திருந்தேன் இந்த அதுக்காக photo எடுத்துட்டது என்னால முடியலடா. Okay, right? Okay. So her question was, which one should I test first, economical or emotional? Normally economical only, but they are very much interconnected. They are very much interconnected. So do not worry about it. Okay.
Emotional, that's a house wants to have a residency here, or like,
Yeah,
you know,
that's why we go for economic
that's why
also. She
it's
says,
confusing here.
suppose should I test
Yes, yes.
first economic emotional connect. Suppose business is in India, but emotion outside India. The emotional connect is outside India. Will you? That is what our question is. Normally, that will not be the case. Okay, but அவங்க நிறைய டீடைல்ஸ் ஆன்சர்ல கொஸ்டின்ல கொடுத்துடுவாங்க. ஓகே, ஆன்சர் வித்தின் பிராக்கெட் கொடுக்க மாட்டாங்க. ஓகே, yeah, both. Yes. R and O is more by derivation. R தான் the main point. If he satisfies the condition, R. Resident தான் condition. தவிர OR, NOR, NOR concept should go out of law for very long time it is being said. Only resident should be the top priority. He opened it because outside it is full. But The Income Tax Act provides for taxation of certain income earned in India by Mr. X, a non-resident. The DTAA, which applies to Mr. X, provides for taxation of such income in the country of resident. Is Mr. X liable to pay tax in India?
Yes.
The DTAA provides for taxation of such income in the country of residence. Okay. Probably when we go further and discuss, you will understand this. Not taxable. DTAA will prevail over. If the DTAA law is more beneficial, okay, இந்த treaties எல்லாம் படிக்க போறோம் நம்ம, okay, more, okay, based upon residence rule தான் ரொம்ப famous, okay. Source rule residence rule depends, okay, but sometimes when the DTAA says that it is taxable for the resident and not for the source, it will be applicable. We'll see that, we'll see. So in this case, the answer is whichever is beneficial, so not taxable in India. Rate தான் பாரு, not taxable in India தான் அது. 40% 30%, அது வேற question, இது வேற question. Okay. The concept of PE is one of the most important concept in determining the tax implication of cross-border transaction. Examine the significance. We all know yes. Okay. A company having a entity having permanent establishment in India has lot of benefits. Okay, has lot of benefits. Whereas if you don't have permanent establishment in India, I will consider you totally as a non-resident and the income split எல்லாம் பண்ண முடியாது. If you have permanent establishment in India, 44 DA is applicable for royalty. You can claim expenses, etc. But if you don't have permanent establishment, 115A is only applicable. Okay, a generic answer. A generic answer, whether permanent establishment will make a difference. I'll இதுதான் அந்த ஆரிஃப் question. Done? Okay. The Income Tax Act provides for taxation of certain income earned in India The DTAA, which are, this is the previous question for which you can see the answer. In respect of an assessee such income, the provisions of the act shall apply to the extent they are more beneficial to the assessee. ஆனா DTAA claim பண்ணதுக்கு tax residency வேற என்ன ஆன்சர் எழுத முடியும் இதுக்கெல்லாம்? இதோட ஆன்சர் ஓவர். The concept of permanent establishment. Double taxation avoidance agreement generally contain an article providing that business income is taxable in the country of residence unless the enterprise has a permanent establishment in the country of source, and such income can be attributed to permanent establishment. The term permanent establishment means fixed place of business. As per this definition, to constitute permanent establishment, there must be a place of business which is fixed and the business of the enterprises must be carried on. 9(1) requires existence of business connection for deeming business income to accrue or rise in India. DTAAs, however, provide that business income is taxable only if there is permanent establishment in India. The provisions of Income Tax Act or DTAA, whichever is beneficial, shall apply. The PE concept is narrower than the business connection concept. Therefore, in a case where the Indian government has entered into DTAA, and unless and until PE is satisfied, the business income would not be taxable in the source country. Okay, so you have to wait for the next chapter. So again, these are in the treaties in the chapter level, the whatever provisions we are reading now. But all questions have answers, don't worry. Whatever I am not answering, please be sure the answers are there in your material, or the answers will be provided by me. Examine the correctness or otherwise of the following statement with reference to the provisions. Double taxation avoidance treaties entered into by government override the domestic law. Yes. Yeah, override the domestic income. Yes, whichever is more beneficial can be applied. But it is not just an yes. You have to write a bigger story. Okay, for everything. Am I clear to you? Shall we move on? Advance ruling, the chapter where the question is more certain. 245W is more certain. Okay, right. Why the law was amended? Advance ruling authority அப்படின்னு ஒன்று இருந்தது. AAR, Advance Ruling Authority, which is like a quasi-judicial body. Where a person can approach non-residents who are not familiar about our tax laws, can approach and get in advance their ruling, and it will bind the assessee and the assessing officer, and that is final. The new law has said that the terminology authority has been substituted with the terminology board, and the new law says you can go on an appeal against the order of the board directly to High Court, not to anybody. அதுதான் கொஸ்டினா இருக்க போகுது. 245W, which says you can go on an appeal to the court. Okay. From the top, let us start understanding. Why advance ruling? Again, with the intention of ensuring that we are not litigating on every aspect. Okay, to avoid the litigations. Okay, get the ruling in advance, like APA, advanced pricing arrangements. The reason is very simple. Why should we let us determine in advance what is the arm's length price and the okay. So one or more boards of advance ruling, as may be necessary, shall be constituted with effect from 1st September 21, 3 months old provision. Accordingly, the central government has located 3 boards, one in Delhi, one in Mumbai, one is a general. But all these things are going to go off. Everything is going to be faceless. Every board will have 2 members. Previously, 10 members were there. Each being an officer not below the rank of Chief Commissioner. Where a resident applicant has made an application to the board for advance ruling, then no income tax authority or tribunal shall take, which means the matter is dropped. Advance ruling is above tribunal. Why? How do we understand? Or equal to tribunal? How we understand? If you want to proceed against the advance ruling, you should go to High Court. So that's where we understand. In other words, a resident cannot pursue both remedies, that is, appeal as well as advance ruling. Okay, if you want advance ruling, drop appeals, or if you want to go for an appeal, advance ruling gates are closed for you. The board will have 2 members. Just because one member is not there, okay, don't think the order of the board as void. Previously, these were void. Okay, a proceeding before or pronouncement of advance ruling by the board for advance ruling would not be questioned or would not be invalidated on the ground merely of the existence of any vacancy or defect in the constitution of the board. Okay, just okay, 2 members தான் அதுலயே வேகன்சினா யாரோ ஒருத்தர் தான் இருக்காங்கன்னு அர்த்தம். Okay, right? Who can apply for advance ruling? Mainly NR. Understand first, a non-resident can apply for advance ruling. Non-resident, originally brought around. Later, a resident entering into a transaction with a non-resident can also apply to know the tax liability of the non-resident. A resident entering into an agreement with the non-resident can also apply for advance ruling. What for? To know the tax liability of such non-resident. Third, notified people, public sector undertakings. And fourth, now it is slowly opening up for residents also who have a transaction value of 100 crores. Non-resident entering into a transaction or proposed to enter into. Resident entering into a transaction with a non-resident only with the intention of knowing the tax liability of such non-resident. Tax tedious. Anything tedious. You are selling a house. or a non-resident is selling a house, நீ வந்து டாக்ஸ் பிடிக்கணும் 50 lakhsக்கு மேல. நீ எப்படி தெரிஞ்சுப்ப எந்த ரேட்ல பிடிக்கணும்னு? லால ரேட் இல்ல. You should make an application in advance ruling saying that I am buying a property from non-resident. At what rate should I deduct tax? இன்னைக்கு அதுதான் ரொம்ப பாப்புலர். The section becomes more popular because of that. Resident, in order to obtain the tax liability of a transaction, the value of the transaction should be more than 100 crores or 100 crores or more. Notified public sector undertaking and chapter 10A, which we will speak. How to make an application? What are all the procedures on receipt of application? Whatever you studied in your APA holds good. I will ask the commissioner that I have got an application. Do you have any objection? And the commissioner can tender his objection. If the commissioner objects to it, then based upon the report of the commissioner, I can reject the application also. Otherwise, I will proceed. I will get all the powers of the AO. I will go into the matter to find out whatever it is and pronounce the ruling. An applicant desirous of obtaining advance ruling may make an application in such form and such manner, stating the question on which advance ruling is obtained, is sought. Okay. Applicant may withdraw an application within 30 days from the date of application. இது ஒரு வாட்டி கொஸ்டினா மாறிது. Can I withdraw the application? Within 30 days from the date of making the application. Where an application for advance ruling is made after 1/9/2021. Sorry, before 1/9/2021. ஏன்னா 1/9/2021 there is no more advance ruling, there is only a board. So this is a transition provision. The application போடும்போது it was an authority, now it is a board. Where an application is made before 1/9/2021, in respect of which no order has been passed and no advance ruling has been pronounced under this section, then the same will automatically be transferred to the board and shall be deemed as if you have made the application to the board. We call it as transition provision. Yes, authority was 10-member, lot of quasi-judicial body, cannot be appealed. Board is 2-member, shorter body and going to be located at various places. Ease of convenience. Authority was only in Delhi. Okay, procedure on receipt of application. On receiving an application, board nu maatinga na pazhaya rule editen AAR nu. AAR stands for authority for advance ruling. Ipo the board. Okay, on receipt of application, board shall forward a copy to the PCIT or CIT and if necessary call upon the commissioner to furnish such records. The records will be returned after the pronouncement. Authority, after examination of the application and records, either allow or reject the application. Correct. When will application be rejected? the matter is already pending with income tax authority or appellate authority. The matter is already pending with some assessing officer, with commissioner or any other appellate authority. At the time of application. However, this bar would be operative for the notified category of resident only when the issue is pending in the court. That is public sector undertakings. Public sector undertakings, if it is with any other authority, they can still go for an advance ruling. Only if it is pending with the court, you need not go with for the advance ruling. Not necessary. Even while in the process, you can make the application. The question involves determination of fair market value of any property. Who can do this? Don't come to advance ruling to say what is the fair market value. Third, the question is relating to a transaction which is designed in such a manner it results in avoidance of income tax. In these cases, mandatorily the application will be rejected. Who rejects? The board. First, on application, okay, on presenting the application, I have 30 days to withdraw. The board can also reject. Okay, the board can directly reject. And twice the board can reject. One, directly they can reject the application. Twice, on the basis of commissioner's report, they can reject the application. Okay, they have asked the PCIT or CIT. Okay, right. No application can be rejected unless an opportunity of being heard is given. What is this? Principle of natural justice. Where application is rejected, reason of such rejection should be given in the order. Copy of the order will be sent. Where the application is allowed, the authority shall, after examining further material as may be placed before it by the applicant or obtained by the authority, pronounce its ruling on the question specified in the application. After going through all records, they can pronounce. On a request received from the applicant, authority shall, before pronouncing, provide an opportunity to the applicant of being heard either in person or through representative. The ruling has to be pronounced within 6 months from the date of receipt of application. And a copy of it will be sent to the applicant as well as the commissioner. What is the binding nature of the agreement? What is the binding nature of the agreement? Advance ruling pronounced shall be binding on the applicant in respect of the transaction in relation to which it has been sought and on the authorities of income tax. It will not be binding on the court. When will advance ruling be void? Same way as APA. When you have obtained it by misrepresentation of fact or fraudulent means, then it will be void ab initio. Powers of the board, 131, 132. Powers belonging to the court. The board of advance ruling shall have the powers of civil court in respect of discovery and inspection, summon, enforcing the attendance of any person, including any officer of banking, and examining him on oath. The last is the new section introduced. Other sections are just amended. This is an introduced section. Appeal to High Court. Most probable question for me. The applicant who is aggrieved by the ruling pronounced or order passed by the board or the assessing officer. Both the department can go on an appeal or the assessee can go on an appeal within 60 days from the date of communication of the order. within 60 days from the date of communication of the order. Hmm? 6 months 60 days from the date of. However, where the High Court is satisfied, they can extend it by another 30 days. Read through advance ruling once. Question number 1. A non-resident made an application to the authority on 2nd July 21 in relation to a transaction proposed to be undertaken. On 31/8/2021, he decided to withdraw his application. Can he withdraw? From 30 days from the date of application, he should have made the decision to withdraw. Okay. Hmm? No, that's application. No. Why should they? Sorry. நம்ம குரூப்ல நீ அழகா இல்ல இல்ல department also gets the big benefit. If the assessee's question raised leads to higher rate of taxation, which can also be pronounced by the advance ruling, which is binding on the assessee. Examine when an advance ruling is pronounced by the authority when an advance ruling pronounced by an authority can be declared void, what is the consequences? Um, uh, no, also for residents it's available. Welcome back. Okay. Assessee, if because of advance ruling application, the procedures would have stopped because whatever the advance ruling is going to say, it is binding on the department as well. So those will be revived, and also that the rule, whatever you gave in the application will be used. Whatever.
Shall we use it?
Am I clear? Mr. Balram is a non-resident. The appeal pertaining to the assessment year is pending before the ITAT. The issue involved being computation of export profit and tax thereon. The same issue persists for assessment year 21-22 as well. Mr. Balram's brother, Mr. Krishna, has obtained an advance ruling from the authority on an identical issue. Mr. Balram proposes to use the said ruling for his assessment pertaining to AY.
Identical is a particular for advance ruling.
Why it can be? தப்பான எக்ஸாம்பிள் கொடுத்துட்டேன். ஹைகோர்ட் ரூலிங்னா இட் இஸ் ஃபார் தட் ஹோல் ஜூரிஸ்டிக்ஷன். ஜூரிஸ்டிக்ஷன். You are right. Only that you have to be clear about the answer. Advance ruling is binding on the assessee who made the application, on the issue sought for, and on the department. Another assessee cannot take recourse of that advance ruling irrespective of whether it is similar case or not. Only one remedy is, in the High Court you can argue that a similar case judgment has been provided so by the income tax department itself. That is the only thing. As far as here it is concerned, you cannot, Mr. Balram cannot take credit of that. இந்த கொஸ்டின் வந்து ஒரு வாட்டி பல்ராம்னு வந்தது, இன்னொரு வாட்டி வந்து ராம் லக்ஷ்மன் வந்தது. சேம் கொஸ்டின். Correct. Yeah. It's a single sentence. I have broken it down.
Let's go.
Go ahead. இல்ல கோர்ட்ல you can quote அவ்வளவுதான். I don't know. Depends upon your case. இதெல்லாம் ஒரே ஒரு இஷ்யூக்கு தான் போவாங்க. ஒரு 15 இஷ்யூக்கு ஒரு ரூலிங் கொடுங்கன்னா போக மாட்டாங்க. Authority of advance ruling has the power of compelling production of books, examine the correctness. Yes. All the powers that are vested with civil court are production of books, documents, and enforcing the attendance of a person and your examining him on oath are all the powers of advance ruling, and he can ask the PCIT or CIT to do it. I thought you just lied down over bad. I thought what happened to you? Void ab initio. Okay. So I'm not writing the answer. It is there. Please write it within bracket. Refer the powers of advance ruling authority. Okay. U. 245U in, okay, section 245U, where they have said that discovery and inspection, enforcing the attendance of any person, all these things, okay, right? Question number 5. This is again a repeated question like Balram and Krishnan. This is also a repeated question. An Irish company, Pi Incorporation, entered into an agreement with an Indian company, Beta Limited, for provision of technical know-how and made an application to the AAR for advance ruling on the rate of withholding tax on receipt of from Beta Limited. Beta Limited also made an application to the AO for determination of the rate at which tax is deductible on the said payment. The AAR rejected the application of PI on the ground that the question raised in the application is already pending with an income tax authority. Is the rejection justified?
No, you can still go for proper application.
If and similar, okay, when can application it is a matter already pending with income tax authority or appellate authority. Remember that and answer this question. In Ericsson mobile case, very old case, it was decided what our friend was saying. The applicant case is not pending with any authority. Why are you rejecting it? If it is pending with an authority. Here, the applicant with the advance ruling is PI Incorporation, whereas the person who has gone to authority is Beta Limited. So their applicant's application or applicant's case is not pending with any authority. Second, the reason itself is different. Beta Limited want to ensure there is no disallowance. If you don't deduct tax at the rate specified, then 100% disallowance. So Beta Limited's intention is how their expenses can be protected. Whereas PI's incorporation is what is their tax. The both will be matching is different, but the intention of the application itself is different. So rejection of the application of PI Incorporation by the advance ruling, stating it is already pending with the authority is not correct. Okay. Yeah, it is for the department now to give a unified decision and not there is nothing wrong in the case of an assessee. Assessee has gone on an one assessee and other assessee they have see for all we know PI Incorporation would have gone for the application without even knowing the other party has gone for a assessing officer. Okay, so it should not be rejected, it should be encouraged. Am I clear to you? That is different. The intention of getting a why should PI Incorporation will never be worried about what is the TDS of Beta. PI Incorporation will be worried because about the TDS rate because that is their rate of tax. What is the tax to be deducted at source? Why withholding tax comes as an issue is because of this particular reason. Because that is going to be my tax rate also. Board. Please write board. ஃபெமிலியாரிட்டி எனக்கு ஒரு 15 வருஷமா ஏஆர்னு எழுதிட்டு போர்டுன்னு எழுதுறது கொஞ்சம் உனக்கு புதுசா எழுதுற அதனால போர்டுன்னே எழுதிக்கோ. Hmm. Correct. Rectification of mistake. Apparent on record means they can but express illa. Yeah, assessee can go on an appeal. Department can also go on an appeal. Ah. For rejection of application, can you go on an appeal? Writ petition. இது எக்ஸாம்காக கேட்டுக்கலாம் பர்சனலா வந்து ஆபீஸ்ல இந்த மாதிரி ஏதோ பார்த்துருக்கா ஃபீஸ் மோக்கொண்டு எப்படி ஞாபகம் வச்சுட்டு இருக்கா அப்ப தெரியல. Yes, still they are different applicants. When I am presenting the application, why am I bothered about you? Let both be assessing officer and the authority give the same ruling. They will reduce the job by pasting and copying the same order. எல்லாமே இதுதானே டெம்ப்ளேட் தானே. I think the same. Co and Co filed an application for advance ruling for 1920, 2021 and 21-22. For the financial year 1920 and 2021, notices were issued under 143(2) to the assessee, and subsequently before the date of filing with the AAR, notice under 142(1) along with questionnaire was issued. For the financial year 21-22, notice under 143(2) was issued before the date of filing application with AAR, and notice under 142(1) along with questionnaire was served on the assessee after the date of filing with the AAR. Can the AAR reject the application on the ground that proceedings are pending? Why? Okay, yeah, I take that answer. Assessment, when it commences, when it ends. It ends with the date of passing of assessment order. It commences with the procedural aspect. 143(2) is a notice intimating that your case has been taken up for scrutiny. 142(1) is the process of assessment. Repeating, 143(2) is an intimation that your case is taken up for assessment. 142(1) is the process of assessment. So, for 1920 and 2021, both were issued. So the case is in the process. Now you cannot withdraw it. AAR, you cannot go. But for 21-22, one of the advantages, you have been just intimated that your case is taken up for assessment, but the questionnaire was served on the assessee after the date of filing of application. So for that year, you cannot reject. For 1920 and 2021, they can reject, saying the process is there, we cannot take over, therefore go to your assessing authority. For 21-22, faceless la kuda I have told you, first they will intimate you that your case is taken up for assessment. So 143.2 is a sort of intimation. Only 3% of the cases can be taken up for scrutiny. How do you know that your case is taken up for scrutiny? If the notice comes under 143.2. 142.1 can even be an inquiry, can even be other reasons. 143.2 is the notice. So that is not the criteria that the process has started. Process starts with the issue of notice under 142.1. Are you clear? Question number 7. The term advance ruling includes within it. May I? The term advance ruling include within its scope a determination by the authority for AR only in relation to a transaction undertaken by a non-resident application. Now it is a resident application also, and specified people like public sector undertakings. It is not correct. Question number 8, please read it. It is the same with regard to Balram Krishna. Please read it. Okay, same question, my dear friends. Same like Balram Krishna. What would be the fate of an application for advance ruling made on 15th August in respect of which no order has been passed or an advance ruling has been pronounced under section before 199/2021? Okay, it is deemed to have been made to the board. It is deemed to have been transition provision. Transition provision. All application made before 1/9/2021 for which judgment is not pronounced, okay, right, will be deemed to have been. இத May 22 கேட்கறதே தப்பு, ஏன்னா by that time judgment கொடுத்திருக்கணும். But May 22 question can be this, because by that time judgment would have been pronounced. நீங்க exam எழுதுறதுக்கு முன்னாடி இருக்கலாம், 6 months would have lapsed. But if at all there can be a question, okay, all cases, application made, judgment not passed, there is a transition provision, board will take over that. It is as if it is deemed to have been made to the board. The next case, the next chapter, again a small chapter, questionable chapter, is equalization levy. Equalization levy. What is that? This is because of this Google AdWords, YouTube advertisements, online advertisement platforms which started developing. Even today, this problem persists. They are asking us to pay via credit card. I am unable to deduct taxes. Okay. This problem slowly will go off, but because of significant economic presence definition. What is significant economic presence? Business connection includes significant economic presence, which is dependent upon users 3 lakhs or value of the transaction 2 crores. Slowly we have also brought into what is income attributable to India. If you are using an internet protocol address in India, if you are targeting customers in India, or if you are placing an order based upon an IPA in India, all these things are covered now. That is from financial year 21. This is slightly before they started with equalization levy. Taxation issue with regard to e-commerce transactions. Difficulty in characterizing the nature of payment and establishing the link between taxable transaction and jurisdiction, which is the biggest problem. I told you they are placing the server under the sea. Difficulty of locating the transaction and identifying the taxpayer. OECD, what is the expansion? Economic Cooperation and Development. OECD has recommended several options to tackle this challenge, which include modifying the definition of PE by including significant digital activity, which we have done in financial year 21. Questionable area, I have already told you. PE on the basis of virtual fixed place, yet to come into law. Imposition of withholding tax on gross basis in payment of digital transaction or services provided by e-commerce operator. Yes, we have made this happen in the form of equalization levy. All of us should remember, equalization levy is not there in Income Tax Act. It is there as part of Finance Act. Equalization levy is introduced as part of Finance Act and not Income Tax Act. What are all the services? There are two sections. Section 165, which has been in practice for long. Section 165A, introduced by Finance Act 2020. And that's why you saw a question in the question paper also. That was introduced in the financial year 2021. First, 165. Equalization levy on specified services. What are all the specified services? Online advertisement and digital advertising space. Online advertisement, YouTubeல நம்ம கொடுக்கிற advertisement. Digital advertising space, Facebook, Google AdWords, இதெல்லாம் கொடுக்கிற advertisement or any other facility or services. Okay, right? Who should deduct? Who should deduct? Equalization levy is payable by resident India in carrying on business or profession, non-resident having PE in India. Who should? Resident assessee carrying on business or profession. Let us recollect one of the examples which we had in our classroom. To repeat that example, tomorrow after completing CA, Antonio goes and settles in Dubai. From there he gives a matrimony advertisement. He won't be covered. Matrimony levy. Equalization levy, he won't be covered. Okay. Okay. So on equalization levy will not be only for business or profession. This is what question marithu. Personal services, selling of a house, okay, etc. On the amount of consideration for specified services paid or payable. Equalization levy is 6%. This year they have defined it because it is for significant economic presence. This is useful. So they have defined it. Online sale of goods and provision of services would include acceptance of offer, placing of order, acceptance of the purchase order, payment of consideration, supply. Any one activity, it will be considered as you are doing an online activity. Equalization levy threshold limit 1 lakh. Non-residents having PE in India need not deduct because their entity will pay tax if the resident assessee is not in business or profession. In the 1 minute, 1 minute, 1 minute, 1 minute, friend. Huh? Sorry, sorry, please correct this. Not having PE in India. Not having PE in India. No, no, wait. Sorry, I'll make it more clear. Is correct on non-resident having a இங்கேயும் equalization levy is not here. I am talking about the receiving non-resident. Here I am talking about the payer. Here I am talking about the receiving non-resident. If he is having a P in India, it is taxable in India itself. That's why Google started Google India. Microsoft started Microsoft India, because to avoid this particular aspect. Yes, business includes profession. I think the question கூட வந்ததுன்னு நினைக்கிறேன். Yes. 165A. The biggest difference between 165 and 165A is 165 is like TDS, 165A is like TCS. 165 is a TDS, 165A is a TCS. Equalization levy on e-commerce supply or service. Equalization levy is payable by an e-commerce operator from e-commerce supply or services made or provided or facilitated. Such services may be provided to a person in India, okay, to a non-resident for sale of advertisement, which targets a customer who is resident in India or a customer who access that advertisement through an IP address in India, non-resident for sale of data collected from a person who is resident in India or from a person who uses IP located in India, non-resident to a person who buys goods or services using such IP. You now recollect? These are what is the amendment where we saw attributable income of India in non-resident chapter. The definition changed: significant economic presence and income attributable to India. Includes advertisement which targets customers, Indian customers, includes IPA being India, okay, all these things. Equalization levy will be 2% of the amount of consideration, okay, 2% of the amount of consideration received or receivable by the e-commerce operator. Equalization is not applicable where the e-commerce operator has a permanent establishment in India. You know, the section was brought for Alibaba mainly. And huge profit. They were and there is one other fashion designing website, I mean fashion product or costumes product, which was not having permanent. We don't even know where the permanent establishment is. Okay, where levy is charged under 165, then 165A is not applicable. The sales turnover or gross receipt, as the case may be, of the e-commerce operator from the e-commerce supply or services is less than 2 crores. Threshold 2 crores. E-commerce operator means a non-resident who owns, operates and manages digital services or electronic facility or platform for online sale of goods or provision of services. If they have a PE in India, no problem. If they don't have, 165A is applicable. Consideration means irrespective of where the goods are originating. You are only paying tax. In fact, it is not even TCS. 2% of your sales turnover you have to pay as tax. It is more like 44D, AD. And no, that's what I have defined. What is income attributable to India? Are you getting from these sources? You are liable to pay now. For you, income has arisen or accrued from India. The definition was changed in section 9 to include significant economic presence and to provide what is income attributable in India. Angiyan 2 crores. Angiyan 2 crores. So we are integrating to say, Ipo, you are not even in India. You are Alibaba.com. Okay. You are selling goods and services in India. Is the income accruing for you from India? So far, you are not paying taxes because there was no definition. I was all paying through credit cards. There is no other manner in which I can pay Alibaba. Amazon Mari cash on delivery lang kadayad. Because they are making them understand that they have a PE in India and ask them to pay 2%. Otherwise, they will ban the website. சொல்லுங்க Antonio. Yeah. Okay. So it is now trackable. Everything is trackable, now leviable. That's all. And they have to pay 2%. Okay. Equalization levy is nothing but TDS. So on or before 7th of the month following the month. Whereas in the case of section 165A, on or before 7th of the immediately following quarter. They are not asking you to pay monthly but quarterly. Okay, because it is more like a tax. Any delay, 1% will be the penalty, and you have to file your returns before 30th June. That is the annual information statement. Hmm? Correction for correction. Number TDS ko time. The same. Apply replica provisions. Please read through once. But today, Google has started Google India. So only for if they don't have a PE. Now they are ensuring that they have a PE. If the non-resident has a PE in India, then equalization levy will not be applicable. From whom? Yeah, and now they have a PE in India. So I can directly track the income and tax that PE. You are buying goods. You are liable to deduct 6%. But normally for goods, there is no TDS. Now what did I do is I will come to India. I have a place in India. Amazon has, Microsoft has. As soon as equalization levy, this is not our problem, international problem. TDS எப்படி போயிருக்கும்? They are saying that it is not at all accruing from India. The order is placed on an online portal which is not there in India. First problem adana sonanga OECD la. Okay. Difficulty in locating the transaction. For you, your cousin is there in US. He is placing an order with McDonald's India to ensure that a cake is delivered to you on your birthday. Now it is taxed because the customer, of course, 2 crores varaikkum na tax panna podala, but the customer is in India. It is for a service of customer in India. இது நான் ட்ராக்கபிளா போச்சு. யூஎஸ்ல டாக்ஸபிளா? ஆமா டாக்ஸபிள். ஏன்னா அங்கேருந்தா இன்கம் ஜெனரேட் ஆகுது. ஆனா nobody is knowing. McDonald's is accounting for this income in Ireland. McDonald's in Copeland Island. They know how to track this out. I'm taking a personal example, but in the mari business example எடுத்துன்னு பாத்தீங்கன்னா, see, when I even remember that we used to place advertisement about of our institute in Google AdWords. We were not at all paying any tax. Google was also not paying tax in the initial year. There is a possibility that Google was not paying tax in the initial year. But the income is accruing or arising from India. Placing order is by Bharatwaj Institute, where I claim the expenditure. The person, it's an Indian income. There is a possibility it is escaping from tax net of India because he was not having a PE. Now, if the PE is there, income attributable to India is taxable. What is attributable to India? If it is made from an IP in India, it is taxable. So, look. IP address அதனால தான் foreign card யூஸ் பண்ணி நீ purchase பண்ண கூடாதுன்றதுக்காக தான் IP address. It should be an IP. If the IP is located, yeah. It is tough to track, but slowly we are bringing the provision. Provision முதல்ல கொண்டா, let us face 100 problems. We will solve one by one. Yeah, go ahead. It is only a direct revenue to the government because I don't have a PAN or a TRC to do that. That's why I said, how do you claim it? How do you claim it? All those entities started Indian operation, so that the Indian operation can claim it as a deduction. TDS மாறிடும்ல அது. So it will not be a problem. Yes. Okay. Now, before going into, I found something interesting in our material. எல்லா ப்ரொவிஷனையும் எழுதி அது சார்ட் போட்டா ஏன் 30 பேஜ் வராதுன்னு எனக்கும் தெரியல. But this table is very interesting, friends. Okay, what is the difference between 165, 165A and 194O? Okay, nature of levy, இது equalization levy, இது ரெண்டும், இது TDS. Chargeability, on consideration received or receivable by an assessee being a non-resident for specified services. What are all they? Online advertisement, placing of advertisement in the portal, etc. On consideration received or receivable by a e-commerce operator who is a non-resident owning, managing or operating digital or electronic platform for online sale of goods or services, or both. For e-commerce supply of service made to provider, the consideration என்னன்றது new definition which I have given. Where sale of goods or provision of services of an e-commerce participant being a person resident in India. Okay, so 194O is more for the Indian residents. ROR, I mean, if you have a PE in India, then 194O will be applicable. Okay, selling or facilitating, right? What is consideration? They have defined. Okay, rate 6%, 2%, 1%. Person responsible for paying. This is important. Every person being a resident carrying on business or profession. An e-commerce operator. Here it is not the payer. The payer is the e-commerce operator, the portal, being a non-resident who maintains that. Here, the e-commerce operator who is paying to the final person. An e-commerce operator shall be the person responsible for paying the resident. Further, wherever the purchase of goods or services directly, I told you, I make it through Razorpay. Razorpay will connect with the e-commerce operator. One of them will be deducting tax and sold. Okay. Consideration, you all know the threshold limit is 1 lakh, 2 crores, etc. Okay. Here is what that whatever has been the non-resident in the specified circumstances, namely sale of advertisement to Indian customer, targeting Indian customer, using Indian data, etc. Specified services. Okay, right? So this is a good table which gives you an overall idea about what are all the three sections. Whenever you find time, just look into this table. And then they have given a chart. Chart is not of much use, but table is useful. So it's not just read the provision in 1 minute. Wait, what happened? Question number 1. ABC Limited, an Indian company, is carrying on the business of manufacture and sale of teakwood furniture under the brand name Pure Wood. In order to expand its overseas sales and export, it launched a massive advertisement campaign of its product. For this purpose, an online advertisement is utilized. It utilized the services of PQR Incorporation, a London-based company. For the financial year 21-22, paid 5 lakhs to PQR Incorporation for such services. Discuss the tax implication and tedious implication of such payment and receipt in the hands of ABC and PQR Incorporation respectively if PQR has no permanent establishment in India, or if PQR Incorporation has a permanent establishment and the services is effectively connected to such permanent establishment. Okay, correct, you're right. Go ahead with your doubt. Amam. 2 crore is for the e-commerce operator for the Indian income. Because I want to show you how they have answered. Okay. Yeah. All of them, are they part of non-resident? Who does not have PE in India? 2 crores is the limit, 165A. Total turnover. Look at the way they have answered, and you have to understand that that is the way to answer also. Okay, PQR as a permanent. Equalization is levy provides for 6% levy on the amount of consideration for specified services received by a non-resident not having permanent establishment from a resident in India who is carrying on business or profession. Specified services are. However, equalization levy shall not be applicable where the non-resident has a permanent establishment in India, agreement amount does not exceed 1 crore and it is not for business or profession. First law. Where PQR has no permanent establishment. In the case, equalization of 6% is chargeable on the amount of 5 lakhs from PQR not having PE in India from ABC, an Indian company. Accordingly, ABC is required to deduct an equalization levy of 30,000, being the amount paid towards online advertisement services provided to PQR and non-resident not having a PE in India. Non-deduction will be 100% disallowance because it is non-resident. Since equalization levy is attracted on the amount of 5 lakh, the said amount is exempt because once you pay equalization levy, that amount becomes, that 6% is the rate of tax. So why should I again tax the non-resident? Okay, reverse case, where they have a permanent establishment. Equalization levy would not be attracted as because the company has a permanent establishment in India and the services are effectively connected. Therefore, ABC Limited is not required to deduct equalization levy on the advertisement provided. Since equalization levy is not deducted, the amount becomes taxable in India. Tedious provisions will only apply. Same question will only repeat. Same question. Same question will only repeat. This is the question which will repeat in the exam also. if at all equalization levy is there this year. May I? May I? I'm not writing the answer with the belief that you have read the answer. You have first write the whole law. PE in India, no equalization levy, that income becomes taxable. TDS provisions only applicable. PE not in India, equalization levy 6% for the receiver, no tax in India. E-commerce operator இருந்தா தான் இது அட்வர்டைஸ்மென்ட்க்கு தான் நான் கொடுத்திருக்கேன். E-commerce operator இல்லையா அவரு? Okay. Now I'll come to that question also which you are asking. Okay, this is also same. MNO Incorporation, a country A-based company, is carrying on the business of manufacture and sale of furniture under the brand name Purewood. In order to increase its share in Indian market, it launched a massive advertisement campaign of its product. For the purpose online advertisement, it utilized the services of PQR Incorporation, a country Y-based company which also owns and operates a digital platform. The gross receipts of PQR Incorporation from provision of such services is 3 crores. During the year, MNO had paid 5 lakhs to PQR Incorporation for such services. Discuss the tax implication. Wait. Is MNO having PE in India also is an important. Why? When will equalization levy be applicable? If the advertisement is given by a resident or a non-resident having PE in India. Both MNO and PQR have no permanent establishment in India. MNO has a permanent establishment in India, but PQR has no permanent establishment. PQR has a permanent establishment. Okay? Both MNO and PQR are not having permanent establishment. What happens? Advertisement targets the Indian customers. 165A will be applicable. Please understand, if they both don't have a non-resident giving another advertisement to a non-resident targeting Indian customers, such a portion of revenue attributable to Indian will be taxable. Are you clear? Yeah. MNO is claiming it as expense. India. PQR is also not taxable in India, but the whole process is to. Yeah, I accept with you. That is where you are coming. Now, that's on it. It is complicated. Slowly, only the law will evolve on these things. How to collect the tax? I have to have a DTAA with that country. Ask that country to collect the tax, remit it. These are all policies, procedures which as of now you are understanding this is coming under 165A. This is coming under 165A. For that quantum of income, PQR is liable to be taxable in India. MNO has a permanent establishment in India, 165. PQR has a permanent establishment in India, no equalization levy, section 195 applicable, TDS, and PQR is liable to pay tax in India. Are you clear? Any doubts? Yeah. So it is equalization levy is applicable. Equalization levy is like a TDS. This is the tax of PQR which you are liable to reduce and pay. As usual, taxable. No Indian income is taxable. I mean, having said that, I'll also look into the answers. Okay. First part is about the law, full law as such. Where MNO and PQR have no permanent establishment. Equalization levy would not be attracted in the present case as he is a non-resident service recipient, does not have a PE in India. Therefore, MNO is not required to deduct 6%. However, equalization levy of 2% under 165A is applicable on 5 lakhs being the amount of consideration received by PQR as an e-commerce operator from e-commerce service provider okay, a non-resident in the specified circumstances, namely sale of advertisement, which targets the Indian customer, since the gross receipts of PQR exceeds 2 crores. Are you clear? PQR is liable to pay tax, not MNO. PQR is liable to pay tax. Where MNO has a PE in India, but PQR does not have a PE, 6%, like the last case, 6% chargeable. Okay. And where PQR has a PE, not 6%, normal provisions of 195. Are you clear? No, sorry. Sorry. You asked me. Equalization levy. Okay. There are two sections, 165 and 165A. Nada, sorry. There are two sections, 165 and 165. To whom it is applicable? Payer, who is a resident in business or profession, or non-resident having PE. In the rendu condition like satisfy alana, you are not liable to deduct tax at source. So MNO in case A is not having a permanent establishment in India. Okay. MNO does not have a permanent establishment in India. So no 165 in case A. 165A, receiver. Which receiver? Receives from receiver, sorry, being an e-commerce operator or platform provider. Receives from resident. Person they have to pay tax, provided their turnover has exceeded 2 crores. Okay. Received from non-resident who has a PE. ஏன்னா அவங்க 165 பிடிச்சிருப்பாங்க. So இங்க 165 தான் applicable, not 165A. Received from a non-resident who does not have PE. Why? Because inga avanukku sonna nee no 165 nu 165A applicable. Other conditions satisfied. What are all the other conditions? 2 crores, and the advertisement is given to target the Indian audience. If the advertisement is Netflix oda advertisement ellame Indian audience தான் டார்கெட் பண்ணுது. நீ யூடியூப்ல எந்த வீடியோ வாட்ச் பண்ணாலும் ஒரு நெட்ஃபிளிக்ஸ் அட்வர்டைஸ்மெண்ட் majority of us, apart from the Indian the CPE in Australia, which is becoming very popular in YouTube advertisements. Repeated our advertisements பாத்தீங்கன்னா இந்த Netflix ஓட advertisement தான் வருது. Netflix Indian operations irukku, no problem. So 165 might be applicable to them. But normally YouTube, suppose if they are both Netflix and YouTube in America, they don't have a PE in India. Netflix approaches YouTube, whoever is accessing from Indian IPA using an Indian IP, ensure that my advertisement is being played. Both are non-resident. For example, I am telling you, both Netflix and YouTube are non-residents. ஆனா யார டார்கெட் பண்றோம்?
Something that is not targeted to us, but for the purpose of entertainment or whatever they broadcast. So that advertisement might not be directed to us, but we in turn we have to watch it because it's there, it's part of a game or something. Then in that case, what will happen?
Actually,
Forced ads, for example.
ஆமாப்பா எல்லாமே Netflix is a forced ad பா. First 10 seconds is a forced ad தான் எல்லாருக்கும்.
Even though it's not targeted to me,
It will be very clearly targeted to you because the product, when they say Netflix rupees 499, target நீதா. $10 நான் அவங்க எங்கேயுமே சொல்லது இல்லையே. Rupees 799, rupees 499, targeting Indian audience.
I'm saying in this case, $10 a month.
Across the world, it is not targeting the Indian audience. Across the world, that advertisement will be played. So it is not targeting the Indian audience. Neither 165 nor 165A. But the receiver, அதான் அவங்க source rule, residence rule base பண்ணி tax பண்ணுவாங்க. Dollars, yeah, because of equalization levy. I told you, all these people started Indian PE because of equalization levy.
Now almost all platforms.
Because otherwise I cannot. நான் Google AdWordsல இன்னைக்கு advertisement கொடுக்கணும்னா உனக்கு PE இல்லைன்னா நான் கொடுக்க முடியாது. ஏன்னா நான் 1000 rupees தான் ஸ்வைப் பண்ணணும். நான் 940 ஸ்வைப் பண்ண முடியாது. என்னால டிடக்ட் பண்ண முடியல. ஆனா இந்தியன் கவர்மெண்ட் என்ன சொல்லிட்டான், இல்லாட்டி உனக்கு 1000 rupees டிஸ்அலவுட்னு சொல்லிட்டான் BI. நான் கொடுக்க மாட்டேன். அவன் பார்த்தான், I am losing advertisement. He started Indian operations. PE. This is the logic by which, because obviously we all understand that is their Indian income. Okay, Indian income rather direct, indirect Indian income, targeting Indian customers using IP. Netflix ID வச்சிருக்கியா நீ? எங்கிட்ட ஒரு Netflix ID இருக்கு. I'm honest to you. எங்கிட்ட இருக்கிற Netflix ID is US Netflix. ஏன்னா அங்க இருக்க ஒருத்தர் எனக்கு ஷேர் பண்ணாங்க. நம்ம இந்தியால பாக்குற கான்டென்ட்டை விட 5x பாது, 5 times higher. But I am accessing from an Indian IP. Had I paid to Netflix, had I subscribed to Netflix directly, it would have been taxable. I have not subscribed. Some friend of mine in US subscribed and said, "Iதை use பண்ணி இதுல பாரு எவ்வளவு content இருக்குன்னு." He gave me. I am using that ID. Now the only way they can track it is, it is IP, Indian IP, which is using that ID. But it will evolve. I am telling, the law is at a very early stage. Okay. Now coming back to this question, it's a very clear question. Both doesn't have 165 and 165A not applicable in general. But here 165A becomes applicable because you are targeting the Indian audience. Yeah. Yeah, I'm telling you, yes, you are right. I am not liable to any tax, but you can use 4 IDs. Another example, one of the ID is an Indian IP ID. So is Netflix indirectly earning income from me? இது நான் உங்களுக்கு சொன்ன எக்ஸாம்பிள் அந்த ஃப்ரெண்ட் என்கிட்ட கேஷுவலா ஷேர் பண்ணிட்டது. பட் நிஜமாவே யூஎஸ்ல இருக்கிற ஒருத்தர் சப்ஸ்கிரைப் பண்ணிட்டு இந்தியால விக்கிறாங்கன்னு வச்சுங்களேன். If you want to use Netflix, otherwise what you will pay is 1000 per month. I will give it to you for 300, 400 per month. அவ்வளவுதான். பேயருக்கு தான் இது நான் பிசினஸ். நெட்ஃபிளிக்ஸ்க்கு இது பிசினஸ் இன்கம் தானப்பா. அரைசிங் ஃப்ரம் இந்தியாவா? யா, அதுதான் நான் சொல்ல வரேன். It is very difficult to track. It is too early. I am not going to do anything. Equalization levy under 165 is not applicable. அதனால தான் I am putting one other thing, 165A, to the e-commerce operator, platform provider. Should. Now, as of now, it is too tough today. But I think they are now coming down deeply on that. 4 users எல்லாமே பயங்கரமா அவங்க மானிட்டர் பண்ண ஆரம்பிக்கிறாங்க. Somebody is see, it becomes a game in US. From my subscription which has been made in US, I cannot access from IP India. Very soon they will bring that. Prime doesn't allow. Prime. Region is not available. Region is available. Yeah. No, அதான் சொல்றேன். Login used in UK, only content of India can be viewed. UK அமேசான்ல ஒரு கான்டென்ட், பிரைம்ல ஒரு கான்டென்ட் இருக்கு, இந்தியால இல்ல அந்த கான்டென்ட். அத உன் சிஸ்டர் யூகேல இருந்தாலும் ஆக்சஸ் பண்ண முடியாது, because she is using the Indian ID. ஆனா யூஎஸ் நெட்ஃபிளிக்ஸ் மாத்திரம் என்ன பண்ணாங்கன்னா, யூஎஸ்ல சப்ஸ்கிரைப் பண்ணிட்டு எங்கிட்ட கொடுத்தா, ஆமா, யூஎஸ் கான்டென்ட் which is not available in the Indian platform. Okay, உங்க எல்லாருக்கும் தெரியும் ஆப்பிள் என்ன நடக்குதுன்னு. ஓகே, people are just buying Apple and bringing it into India like anything. Every person can carry only 2 mobile phones னு இதுல போட்டாங்க, யூஎஸ்ல லா கொண்டு வந்தாங்க. Only 2 mobile phones they can carry, because people were carrying 5, 6. Only 2 mobile phones. So what the majority of them did is, எல்லாருமே இந்தியா வந்தா ஒரு இது வச்சுக்கிறாங்கன்றதுக்காக 2 போனையும் வீட்ல, அவங்க போனை வீட்லயே வச்சுட்டு 2 புது போன் எடுத்துட்டு வந்தாங்க. Now they said that it should not be a packed phone. ஆமா, எடுத்துட்டு வராங்க. இப்போ you cannot bring a packed phone. Packed phone வந்தா இங்க customs duty போட்டுருவாங்க. கவரை பிரிச்சு எடுத்துன்னு வராங்க. நெக்ஸ்ட் என்ன சொல்லுவாங்கன்னா, அங்க ரெஜிஸ்டர் பண்ணிருக்கணும், யூ ஷுட் ஹவ் ஓபன் த போன், registered it there அப்படின்னு கொண்டுருவாங்க. That's the true law. We all know that the difference is 40,000. சொல்லுங்க. Jailbreak it, yeah. Yes, jailbreak it. Yeah, correct. Okay. ஆக்சுவலா பாத்தீங்கன்னா ஒரே ஒரு சேஞ்ச் மாத்திரம் கொண்டுட்டா போதும், ரொம்ப ஈஸியா மானிட்டர் பண்ண முடியும். அவங்களோட சார்ஜர் இந்தியால யூஸே ஆகாது. நான் வந்து யூனி சார்ஜர் கொடுக்க மாட்டேன், அவங்களோட பிளக் பின்னே தப்பு, நமக்கும் அவங்களுக்கும் சம்பந்தமே. நிறைய இடத்துல அது வெடிச்சிருக்கு பிளக் போட்ட உடனே. இல்லப்பா அந்த சார்ஜர் இங்க வாங்கினா அதான் அந்த யூனி பிளக்ல பண்ணி பண்ணாம இருந்தனால உனக்கு வந்து you are winning the competition, but they will not do that. Obviously they are, India is a big population market, who will lose it? Because customs duty is lost. ஆப்பிள் இங்க போய் ஒரு கடையில வாங்கினா 1,22,000, யூஎஸ்ல 80,000 90,000 வாங்கிட்டு வர. 122 plus GST. GST lost, income tax lost. Obvious no. Actually திருப்பி போகும்போது அவங்க வெரிஃபை பண்ண மாட்டேன்றாங்க. நீ ரெண்டு குழந்தையே bring ஆமா watch okay okay yeah Sarah Raja. Yeah, it's difficult. See, law will evolve slowly only. Law breakers needs to pay for their act. That is the whole point. Okay. We should also ensure that the rates are competitive. And the 122 India la 1 lakh nu panta, we would earn big tax revenue. Yena I think equivalent to American population, Indian population are having Apple phones. Population 10x are not equivalent number of people. I see now Apple becoming a very normal product. No more it is that and the carrying an Apple is a prestigious thing as much as going on a Rolls Royce. OnePlus வந்து அதை break பண்ணோம். Apple இருக்க அத்தனை ஃபீச்சர்ஸையும் நான் கொடுக்குறேன், எல்லாத்தையும் கொடுத்தாங்க. Apple came and slashed that's a big game. We'll speak sometime later. XYZ Echo, a non-resident entity based in Singapore, owns and operates an electronic facility with its effects on online sale of goods manufactured by it. The following are the receipts. Receipts from sale 158 lakhs, receipts from sale of goods to person non-resident in India but resident in other parts of South Asia 96. So total turnover has exceeded 2 crores. And the entity order total, because they are an owns and operates an electronic facility total. Out of the said sum, 57 lakhs relates to receipt from person using IPA located in India. So I am targeting 165A here. For this 57 lakhs, I need to discuss the equalization levy if the company has no permanent establishment. 165A has a permanent establishment and the sale of goods is effectively connected with the permanent establishment. 194. Oh, they are not going to pay. They are going to okay. Right, all the that is all the three questions are repeated question. Adnal na vandu I am directly showing you the answer. Okay, 165A, 2% of the amount of the consideration. Okay, on this 2 crore 15 lakhs, because this is from India, this is from India. If they don't have a permanent establishment, okay, equalizer would not be attracted. அவங்க 194A கூட எழுதல ஆன்சரா. Okay. Oh, discuss the equal irrespective of the quantum. Am I clear? Okay, right. So Oh, would your answer change if out of the above receipt, only 40 lakhs relates to receipts from person using internet protocol address? Change ஆகும்ல 196 ஆயிடுமே turnover. Turnover change ஆகும்னு நினைக்கிறேன். 198 lakhs தான் வரும் turnover, less than 2 crores. I didn't copy that part of the question. Okay. I think that was the question also in the examination. The only question that is pending. ஒரே ஒரு நிமிஷம் நான் வரேன். நீ கேட்கிற கேள்வி எனக்கு புரிஞ்சுட்டு ஒரே ஒரு நிமிஷம். This is the question, right? Mr. Z, a non-resident individual started business with the 194, the TDS. XYZ is an India e-commerce operator incorporated in China with no physical presence in India. It has no permanent establishment. Sells goods of 1.2 crores to Indian resident. Services provided to persons resident in India by way of sale of online advertisement when amount of bill to a recipient during the financial year does not exceed 1 lakh. Gross amount of bills. So, recipient would not have deducted 165. ஏன்னா அவங்களுக்கு 1 lakh தான் லிமிட். So 120 plus 70 190. Okay, services provided to non-resident by way of sale of online advertisement which targets Indian customer 20. So 170 120 plus 70 190 plus 10 210. Okay, the above data pertains to discuss the tax implication 2% on 210. எதனால 165 applicable இல்ல? இது வந்து wherever 165 is applicable, 165A is not applicable. In this case, 165 is not applicable because aggregate amount to a recipient does not exceed 1 lakh. So 1 lakh is the limit for 165. 165 not applicable, so 165A. Remember, 6-mark question. Yes. அதனால்தான் 165A, 2 crores limit and then 2%. 3 parts of answer, but it should be a lengthy answer explaining everything. இல்ல இது வேற question. Sorry, நான் ரெண்டும் ஒரே question நினைச்சேன். இது வேற question. 165 is applicable for that 70 lakhs. If if in this question paper question, okay, if here it is more than 1 lakh, for this 70 lakhs 165, that is not for this company XYZ, for the payer equalization levy would have been. Because 120 plus 20 makes it only 140. That's what in this question they have not taken that. I'm just looking into whatever answer you're, sorry, I'm just looking into whatever question you're asking me. Yeah. So how they define turnover is like this: to a person resident in India and a person who buys goods or services or using an internet address in India. So in that case, 120 plus 70 plus 20, 210. will be definitely crossing the limit. For that 70, only 165A is applicable. For the remaining 2% of 140 will be applicable. Yes, you are right.
You don't take what is in other.
Threshold limit for 165, 1 lakh per player. Threshold limit for 165A, 2 crores for the provider, for the e-commerce provider. 2 crores of income from resident, okay, NR targeting all these things, etc. In the question asked in the question paper, sale to India is 1.2 crores. Sale to India is 1.2 crores. Okay. Sale or advertisement not covered under 165A is 0.70. 0.70. Okay. And third category is 0.20. Okay. So total comes to 2 crores. On this 2 crores, 2% is the tax. On this 2 crores, 2% is the tax. The questions our friends are asking me is, suppose if this is covered under 165A, 165. Suppose if this is covered under 165, for these two things, 120 and 20, 140 2%, and for the 70, there is only 165 for the e-commerce operator, no liability. Because, because it has exceeded 210. When I measure the turnover, I take the whole turnover. Turnover ki idu exclude pannakudadu. Computation of tax kada, we should exclude that, not for the turnover. MNO corporation dana adu. In the question dana. Yeah. Which targets who is a resident in India since the gross receipts. This one. Yeah, that's what I have given. They have given the alternative answer. 158 plus 47 வரும்போது 2 less than 215 போறது. Okay, so 198. So it is not applicable in Kolranda. Instead of 57, they are not changing out of this 57. 48 is not applicable and 48. Instead of 57, it becomes 48. Yeah. That's what I understood. It's only for Indian income. Indian income. All the three are. Okay. Right? Okay. So PE, I just told you yesterday, what is a PE? Okay. Place of management, branch, office, factory, workshop, sales outlet, warehouse. Liaison office, will it constitute PE? Okay. Held by Supreme Court that Indian liaison office of a foreign enterprise engaged in remittance supplies would not constitute PE. Nama business connection idu paathom. Liaison office just displays the product. Okay, they are not delivering. Okay, the Supreme Court held that even if the activities of business liaison office are regarded as business, they are of preparatory and auxiliary in character. Whereas project office even though a fixed place of business through which core activities are not carried on, hence the same cannot be held in this particular case. Only a project office where business is not carried on is not PE. Am I clear to you? Okay, right? Let's complete the remaining areas tomorrow morning. Okay, meet you at 6 tomorrow. We'll meet 6 o'clock tomorrow. Maximum before 10 o'clock we would have completed. All the best, friends.